World stocks slumping today as the JSE All Shares slipped. With it, investors are concerned over the growing risk of more aggressive interest rate hikes in the United States and Europe. Recession fears are mounting. Viv Govender is with Rand Swiss. He joins me now for more analysis on that. Viv, thanks indeed for your time. Well, I guess it's all about inflation, isn't it? And we know markets don't like inflation. Is that chiefly what's behind the global markets red today?
Yes, to a certain extent. What happened was, for the last month or so, we've seen the U.S. Fed being doubted in terms of its rate hiking schedule. Markets had come to believe that the Fed was going to start cutting rates much earlier than anticipated. They were going to stop this rate hike cycle sooner than they had been advertised. And that was what caused that huge jump up that we saw, a double-digit increase across all indices in the US in the last month or so. On Friday, Jerome Powell basically came out and said that's not going to happen. The Fed's going to persist with its rate hiking cycle. It's not going to slow down as early as the market had been wanting it to. And so we are seeing some of that positivity, being removed from the market. I don't know why the market was so convinced that the Fed was going to crumble so quickly. I personally believe the Fed won't be able to maintain its targeting of 3% interest rate, inflation rate long term. But, that's not going to be something that changes in the near term. It's only going to be when, you see unemployment rise significantly in the U.S., when we see a prolonged period of, negative growth, then the Fed might be willing to basically change its policy. Right now, unemployment is really low. U.S. growth rates are not that bad, and there's still positivity around the U.S. growth forecast. So I don't think the Fed's going to change in the near term.
Yeah, so the rates will go up, and that's the consequence of it. All right, so some company news today. I want to know what you think about this entire Massmart issue. So 900 million rand loss for the owner of Macro and Game on a day where they also announced that Walmart will do a buyout of Massmart, the minority shares I speak about. The share price liked it. It's about 43% in the green. What did you make of this? Let's start with the results first. I mean, that's a huge hit that Massmart took.
Yeah, and look, and the problem is it's not just the once-off. It's been a continuing disaster for Walmart ever since they got into the business. As you mentioned, an 80% drop in valuation for a couple $1 billion investment that they put in about a decade plus ago. Massmart has not been able to really compete with the likes of the ShopRites of the world. Certain parts of their business, for whatever reason, like the game shops, have basically, just fallen out of favor with consumers. If you've been doing a mall recently with a game, you see that the size of the footprint in the mall is quite large, but the amount of customers going in and out is quite small, especially when you compare it to a normal like a Pick n Pay or a Checkers in a similar kind of mall setting. So yeah, we have seen certain parts of that business really fall apart in terms of its profitability. And so I think what the company is thinking of doing right now is taking control of the rest of the business and what is the pretty cheap price compared to the initial investment, and seeing if they can do a turnaround.
Yeah, we'll have to wait for that. Look, the other company releasing interim results today, Sun International. These are the guys that own Sun City and Wild Coast. Some recovery in gaming, Viv. I mean, a dividend is paid out. I mean, this is after 6 years. I wonder what you make of their showing. It's still not quite the levels that we saw before COVID. Here's an industry that's been damaged by COVID-19. When you take a look at Sun International, what do you see?
Well, not only is not at the levels before COVID, the level of just before COVID was a pretty negative level as well. If you had looked at the company just before the COVID shutdowns occurred, that share price had been falling for quite a bit of time, but significantly. And so COVID was another hit on top of that. So they are returning to their COVID levels, of just pre-COVID levels, right about now. They're close to it. Unfortunately, there's still quite a bit to go before they return to their, all-time high levels. So I think that's something to be looked at as well. Very dependent on the consumer, very dependent on travel, on tourism, and on business conferences and so on. All factors I think that in the current environment may be under a bit of pressure.
Yeah, all right. Well, I have to leave it there. Viv Govender is with Rand Swiss. Thanks very much indeed for talking to us.